What's up, everyone? It's Karthik with MoneyVest. I am back in Dubai, so I just flew in earlier today, and I'm back in my home office for the next 1 month because the next 30 days are going to be very, very critical. We've got the earnings season pretty much started for the third quarter fiscal year 2024. So we're going to be talking about a lot of earnings that are coming out in the next, say, 15 to 20 days. We've also got elections that are coming up, and we've also got the FOMC meeting in 23 days, not to mention inflation numbers and a new round of economic data that's also going to be scheduled for the markets and, of course, for the U.S. economy. So lots on the docket for the next 30 days, and I will be traveling to the U.S. I'll be going to Florida. We're going to have our MoneyVest meetup. So if you haven't already messaged me, DM me on Discord if you're interested in participating in our MoneyVest meetup. Market's hitting a new all-time high. Looks like there is nothing that's going to stop this market from going higher. So the Dow Jones crossing over 43,000 for the first time ever. We had the S&P 500 closing over 5,859 points, and that was up over 77 basis points. And the NASDAQ also pushing back up over 18,500, up almost 1% on the day. The long-term portfolio was up over $4,000, and as you know, the options portfolio also doing really well. However, I do have a Tesla position that I'm holding on to right now with an unrealized loss of just under $4,000. The robotaxi really did crush my Tesla position on these 100 shares. There was a little bit of this misconception that I picked up all my shares in the 250s. Most of my Tesla shares are in my other long-term portfolio, which are at a different sort of cost basis. But this one right here was a simply buy right, and my adjusted cost basis has really come down to 240s right now, and I'm going to continue to sell more calls to generate even more premiums. And for the Nvidia position, as you can see, 600 shares up over $18,000 in unrealized gains. However, I've also got calls against those shares that I've capped my upside, but I will be extended those contracts further out in expirations to unlock more capital gains for my Nvidia position. So all in all, unrealized gain of just over $14,000. So if you want to get access to everything, all the updates, and find out exactly what I'm trading, what I'm buying, selling on a regular basis, weekly basis, long-term investing portfolio, as well as options trading portfolio, link's going to be down below. I posted this video earlier, over the weekend to go over week number 7 for the members for the options portfolio, as well as, if you want to get access to the MoneyVest education tier, that will give you access to all of this. This is a lot of courses and a lot of tutorials. The fundamental analysis, we got options trading, we got technical analysis, psychology of investing, members only videos, as well as options portfolio updates. So there's over 175, close to 200 videos that you can access and unlock for just a small amount, right? So if you want to join, link's going to be down below. And I also wanted to share my performance for 1 year on a year-to-date basis as well. So year-to-date, the long-term portfolio is up over 26% compared to the S&P 500, which is up 23%. On a 1 year basis, it's up over 41%. And again, these are all calculated numbers from Fidelity. So this is all performance through October 11, 2024, which is actually not including for today's gains, right? So I'm sure S&P 500 is higher, the portfolio is higher, so you will be able to see those updated numbers, of course, once today's numbers are accounted for. But 41%, and all in all, since 2021, the portfolio is up over 61%. So just want to, address these things that a lot of times people think that I'm a bear. I feel like, people think that I'm bearish on the market, and I am really just expecting the markets to crash or go down. I'm not bullish at all. That can be the perception of a lot of new investors and beginners that are coming over to this channel and joining us for the first time. But I want to be very clear that I am very, very realistic about what my expectations are from the markets moving forward. And I like to look at risk and reward, right? A lot of people may sell you the reward. They will be like, oh, you can make 10x your returns here. But my main focus has almost always been on reward, on risk. It's been on risk, right? So how much risk am I taking on to generate that rate of return? And if that's an acceptable level of risk for my risk tolerance to generate that rate of return. So that's always been our psychology of investing here at MoneyVest, is that we look at both risk and reward. And the reason why risk comes first is because on this channel, for me, risk does come first. I look at my risk associated with that potential reward, and then I weigh my options to better decide whether it makes sense or not. So hopefully that makes sense. So I'm never really bearish. I've made myself very clear many times that I'm very optimistic. I'm very bullish for the markets, for the earnings, for the long-term potential. But oftentimes you'll find yourself in this environment where everything can be very stretched. Markets can be irrational. Markets can be overvalued. Markets can be technically overbought. There's a lot of signals on the MoneyVest dashboard that are signaling for of unfavorable risk-reward ratio. And so in those circumstances, I like to take a step back and not really do anything. I let the markets do its own thing. So for example, today, just sitting back, enjoying the gains, right? Sometimes you don't have to do anything. Let the markets do the legwork for you. And this is really why you're investing, right? You're investing so that you can benefit from all the gains the market has to offer. So you can sit back, enjoy, and just go out, right? Just go out, enjoy your day, and let the markets do all the work for you. So that's the whole idea. But when there are opportunities, when there is something to do, and when the risk reward is really good, that's when you deploy capital. That's when you take most of the advantage. So a very, very risk-on rally in the market. So technology leading the way, up over 1.3%. So a very nice move to the upside. And utilities was the second best leader in terms of sectors, up over 1.29. We had QQQs and S&P 500, both of them pushing up over 80 basis points each. Real estate up 76 basis points. Financials up 67 basis points. We had healthcare, industrial, materials, communication services, discretionary, staples, everything pushing higher really well, up over 0.5% to as much as over 1% on the day. Even the bond market essentially was flat for the most part, 3 basis points higher. So in my opinion, I think this is a lot of new money sort of entering the market because we've had a lot of money sitting on the sidelines for a really long time. And Tom Lee was also on CNBC just earlier today. And he also mentioned that there is a lot of investors that are still very, very underinvested. So he mentions that we've seen this market to be very, very resilient, although he was expecting a very choppy October, and so was I. I was expecting the volatility to be higher and the markets to not be as strong as they've been. And he also mentions, and I quote, "I've underestimated how strong this market has been. Macro data is becoming less important, so it seems like nothing really matters to this market right now. It just wants to go higher, and a lot of cash is sitting on the sidelines. October has turned out to be a great month. Investors are underinvested in stocks and hence new money entering this market. It makes sense for the Fed to be dovish. This election is becoming a less of a coin toss and more certain, and investors like certainty, and stocks will do pretty well in a post-election cycle because markets trade on certainty. Markets actually thrive on certainty. Once we know exactly what's going to happen, then the markets tend to be a lot more free to run higher, and there's going to be a lot more capital deployed into the market. In terms of inflation, Tom Lee says that shelter is rolling over, auto insurance is coming down, inflation doesn't have the upside drivers anymore. However, there's also that exception of a commodity upshot, which is what we have talked about on the channel before, and that is oil prices. If oil prices continue to move higher in the tensions over in the Middle East, that of course is going to cause more problems for transportation services, for oil and gas, electricity, utility pipe gas, whatever the case might be, and that's going to potentially put more upwards pressure on inflation once again. So that's the only risk from an inflation standpoint that we have to address, which is the commodity upshot on the back of a potential escalation in the Middle East when it comes to those geopolitical tensions. Now, coming over to some of the winners and losers, markets pushing up over $401 billion in market cap change. The big three jumping over $165 billion, Magnificent Seven almost $180 billion, and Top 10 almost $181 billion on the day. The big leader, Nvidia, of course, crossing over $3.4 trillion. That's a big milestone once again. 6.5% weighting for the S&P 500. Apple is still the big boy, 6.7% weighting with over $3.5 trillion, gaining another $60 billion, and Nvidia was up $83 billion. Alphabet was up over $23 billion, or up over 1% on the day. However, I will be discussing in more detail Google in a separate video because I was actually watching one video on Alphabet in the plane, and that was actually quite concerning in terms of how their algorithm and search engine has changed so dramatically over the years. So I'll go over that in more detail in a specific video, but I'll briefly address that video in this update as well. Microsoft up over 21 billion. Then we also did have Adobe gaining over $6 billion. We had United Health, Applied Materials, Qualcomm, all these stocks pushing higher. So Nvidia topping over $3.4 trillion for almost a record close, getting up to over $138 per share, and I think it hit a high of 139 and something dollars. So Nvidia high for the day, $139.60, and the all-time high sits at well over $140.76 or so. So very, very strong move to the upside. We're back up to almost all-time highs here. Amazon down over $13 billion. Netflix also reporting earnings later this week, down over 4.4. Advanced Micro Devices, Caterpillar, Uber Technologies, CrowdStrike, JP Morgan, Amgen, Eli Lilly, all these stocks dropping anywhere from 1 to as much as $13 billion. Now, money market funds surged to a record well over $6.7 trillion. And this right here was the Federal Reserve's rate cut of 0.5 percentage point. And we've seen such a massive spike in money market funds that are sitting on the sidelines as yields have also started to move higher, right? So we're starting to see the 10-year treasuries back over 4%. So if you come over to the US 10Y over here, there's also been a significant increase in the 10-year treasuries, right? Ever since the Federal Reserve actually embarked on this rate cutting cycle, we've seen the 10-year treasuries move back higher. And as a result, the money market funds have also spiked to well over 6.7 trillion to a record high. And now we're sitting at well over 4.1%. So it's kind of interesting that despite having a higher interest rate, higher yield, and when yields go higher, especially when the 10-year yields are on the way up, it actually has a negative effect on the tech stocks and growth stocks because, when you run the discounted cash flow model and this is the risk-free rate and you're running the capital asset pricing model, the future cash flows are worth less when the risk-free rate is higher versus when it's lower. And as a result, their discounted cash flow value, the intrinsic value, tends to be a lot less when the 10-year treasuries are higher. But market continues to disregard that. Market doesn't really care about where the 10-year yields are. At this moment, they just want to be overweight risk on, and they just want to be overweight tech stocks. And that's really what we're seeing. We're seeing a lot of momentum in technology that's moving this rally, that's leading this rally higher. Now, Fed governor was also on the calendar today. So if you come over to our economic calendar, we're pretty light, as I mentioned earlier in the week, that we don't really have a lot of things that are scheduled for this week. But we did have Kashkari and Fed Voller, with the speech today. And then later this week, we only really have the retail sales and building permits, housing numbers that are coming out that are on the high impact for the market. And then earnings calendar, of course, we've got a lot of companies starting to report tomorrow. So we've got Johnson & Johnson, Bank of America, we got Charles Schwab, we got Netflix, Morgan Stanley, Intuitive Surgical, Lamb Research. All these companies are scheduled for later this week. But federal Governor Waller sees need for more caution ahead when lowering interest rates. So there's a few things that he mentioned. He said that inflation, gross domestic product, and income, the policymaker indicated that the data is signaling that the economy may not be slowing as much as desired. And while we do not want to overreact to this data or look through it, I view the totality of the data are saying monetary policy should proceed with more caution on the pace of rate cuts than was needed at the September meeting. So, with a hotter than expected inflation that also came in earlier last week, right? So Thursday, Friday, when we got the CPI and PPI numbers that came out, they came in hotter than expectations. That also is putting a little bit of doubt. It's casting a shadow of doubt for whether the Federal Reserve is going to be cutting interest rates or not, considering that inflation is showing some signs of accelerating back up, especially when you consider that oil prices are on the way up as well. The 10-year treasuries are on the way up, so inflation expectations are also rising just slightly. But right now, the markets are still very much priced in for a 25 basis point cut. So 25 basis points coming in November, another 25 coming in December, and a total of 50 basis points still priced in from the market right now by the end of this year. Now, coming over to the differentials, we do have utilities still leading this market higher on a year-to-date basis, up over 27%. Technology is very quickly catching up right now. It's up over 23%. So now the differential has shrunk down to 4%. So we were at 10%. We came down to 8%. Then we came down to 6%. And now we're down to 4% for that differential as technology continues to gain a lot of momentum. It continues to see a lot of buyers stepping in. This is a risk-on rally that we're seeing right now in front of our eyes, especially if you consider the XLK divided by XLU, the chart that I've shown you guys so many times. You'll notice that it continues to move higher. And of course, last week it was up a little bit over 5%, meaning 5% worth of outperformance relative to utilities. And we've also seen the relative rotation graph, which is showing a lot of momentum for utilities, for technology, for discretionary, and for comm services, and the stocks that are actually moving downwards to a more lagging or weakening part of the quadrant are the ones that are utilities, defensives, and staples. So this is definitely a big shift in the overall market environment as we get very risk-on post rate cuts. Now, coming over to Google. This was a video that was posted by one of the YouTubers, Mr. Who's the Boss, 1.9 million views. And this was 2 days ago. I had the chance to watch the entire video, 17-minute long, and why Google search is falling apart. And in this video, really well researched and really well animated. I highly recommend for you to check it out if you want to. But there were 3 really key areas why this person, kind of put a case together as to why Google search is really falling apart. And there was actually some very interesting data points, such as the need to focus mostly on sponsored ads, the need to focus on SEO, the need to focus on profits as opposed to user experience has really made Google not the company that it was, but the company that it is today. So there's a lot of things why Google was kind of failing search is because, something as simple as if you search, what's the population of the world, right? What's the population of the world, on Earth? In this video, Google responded an answer of 7.5 billion as of 2022. So it was a very, very outdated answer, right? Something as simple as the world population, Google was not able to answer most up-to-date statistics on that. And every time you try to search for something, 32% of your screen, especially when you consider the entire inch of your MacBook or computer or laptop or whatever it is that you're looking at, Google sort of puts out the results that are sponsored, right? These are paid advertisements to Google, and they're taking up pretty much the entirety of that screen. It's not until after you scroll that you see some of the more organic search results. So I'm actually going to be doing a more detailed video on this because, I've invested in Google and I believe in the long-term potential, but there are some concerns as to how the business model is also changing for the company. So I really want to address that in a future video, but I figured, I'd bring this up because there's definitely been a lot of concerns over Google's business model as the DOJ continues to investigate and is now also considering kind of splitting the business up. So we'll talk about that in a more separate, more dedicated video in the future. But this right here was the entire heat map. Everything green, Amazon slightly down, Uber slightly down, AMD, CrowdStrike pulling back, but Nvidia was the big winner on the day, up over 3%. And of course, Meta, Google, Apple, Microsoft, Tesla, all pushing higher. The MoneyVest index is back above 4. We are back above 4 for the MoneyVest index. Volatility continues to be a little bit more on the elevated side. We are in the 60th percentile still. We're also very much in backwardation, which is also quite interesting that we're still in backwardation despite 3 very strong days for the market. And again, majority of stocks trading back above their moving averages. So that is also very, very good to see. Put call ratio is down to 0.830. And again, there's color coded is yellow or red, still suggesting for some unfavorable risk reward ratios. So I'm just holding off on deploying capital or buying aggressively and just enjoying the ride to the upside. Now, one more ETF that I'm actually planning to buy more of, right? So I'm actually already have this particular ETF, and I'm planning to buy more of IWM. So IWM is the small cap ETF that I started dollar cost averaging into, and I will be buying a little bit more into this ETF if we are able to successfully break out above 223. And this right here is a potential bull flag breakout that we're now witnessing for IWM for small caps. And I do believe that if rate cuts continue to happen, inflation is back under control, and there is a very strong case for a soft landing scenario, then I do believe strongly that IWM is going to perform a little bit better than the S&P 500 or the NASDAQ. So right now, if you take a look at IWM divided by SPY, you'll notice that there is maybe some outperformance coming in over the last 3 days. However, on the weekly time frame, you'll notice a trend is very clear. There is still very much significant levels of underperformance. However, every time there is any type of a rate cutting cycle, you'll notice that, of course, back in 2019, 2020, we were seeing significant amount of rate cuts from the Federal Reserve. It's not until 2021 or 2022, really. Let me just go over that very quickly. Fed funds rate. That the Federal Reserve started to raise interest rates, right? They started raising interest rates in January of 22, is when IWM started to perform worse than the S&P 500, as you can see over here. This entire chart is pointing downwards, meaning that IWM is performing worse than the S&P 500 as rates were going higher, because it actually is, small caps are a more rate sensitive sector than S&P 500, which is large cap. But of course, during times of rate cuts, this right here is really what I'm trying to highlight and capture in this market update, because if we were to see rate cuts once again, and if that is small caps rate sensitive more than large caps, then I do believe there's more outperformance that's going to come in from IWM. So my exposure in small caps will increase if you're able to get some nice breakouts to the upside, because this is really what I'm banking on, over the next, let's say, 12 to 18 months as rate cuts continue and that soft landing scenario continues to play out from a Federal Reserve standpoint. Okay, now coming over to S&P 500. So new breakout, new all-time highs, 5,859. So huge congratulations to everybody. Very, very nice breakout from consolidation here. And if we were to extend this a little bit further, the target for the S&P pretty much is going to be at 6,000. So this right here ends up being a potential target for S&P 500, which is going to be eyeing very, very closely. That's going to be sitting roughly at 6,000 on the dot for SPX moving forward. That's going to be the upper range of this uptrending channel. And of course, support level is going to stay put at 5,600 down to 5,550, down to 5,400 for S&P. Talking about the NASDAQ, and NASDAQ also starting to break out from this higher high and higher low pattern. Next resistance and target is going to be 18,600. So this right here is going to be that level to keep in mind. We're very close to all-time highs for the NASDAQ right now. So that's going to be that target. Support level is going to stay put at 17,700 moving forward as well. Talking about Apple, and Apple also starting to move up from this sort of symmetrical triangle. Next resistance and target stays put at 233. That's going to be the level that we're watching very, very closely, and support level at 217 down to as low as $206 per share. Amazon selling off right at that resistance yet again. If you take a look at the high for the day, 189.83. We've got a resistance at 189.81. Like, we're just off by a couple cents here. So again, we don't make this stuff up, right? The technicals are real. There is buyer-seller demand, resistance, supply, all that good stuff is valid always. So we're getting rejected here at 189. Support level is going to be 181 for Amazon for the moment. Coming over to Tesla, and Tesla here in a no man's land, very oversold on the RSI and the MACD. $208 is going to be that support, and Tesla has gone through that process so many times over where gaps down, there's literally no volume, no demand, nothing for Tesla, and this is where we are. Support at 208, resistance now sitting roughly at $234. So that right there, 234, 235, huge resistance for Tesla. Coming over to NVIDIA, and NVIDIA almost back up to all-time highs, huge breakout to the upside. I am really now considering just moving out my calls to December, increasing my call strike to like 120 or 125, getting them up to as much as possible while generating a net credit, and just sit back and enjoy the 600 shares and the profit that I can collect on these NVIDIA shares. So that's going to be the idea. I'll update everybody in the Discord. Again, if you want to get access to all the alerts, find out exactly what I'm trading on a weekly basis, link's going to be down below. And also get a whole playbook for investing long-term, because we will identify very good opportunities and risk and reward for you so that you can take advantage, as well as the shopping list that we're also going to include. Resistance is going to stay put at 139 right now for NVIDIA, 139 to 140, and support levels sitting roughly at 129 for this company as well. Advanced Micro Devices, a lot of consolidation sideways. Resistance is going to stay put at 171, so that right there is going to be that level to watch, all the way up to as much as 186 for AMD as well. Support level here sitting inside this green rectangle for Advanced Micro Devices. Very nice, consistent higher highs and higher lows. And resistance, like I said, all the way up to 186 for Advanced Micro Devices. Coming over to, let's see, Meta Platforms. So first, PayPal. PayPal also pushing higher, up over 20 basis points. Coming up to this level of support and resistance again. That's sitting roughly at $80 and 57 cents. And of course, my target's going to stay put at $89 for PayPal, and support level sitting roughly at 76. Coming over to Visa, and Visa here also starting to break out above this resistance, which will go ahead and turn this level back into a support. And next target is going to be $282 for Visa. And support level is going to stay put at 278, down to as low as $272 for Visa moving forward. Coming over to Meta platforms, and Meta here also getting rejected at this level of $602. A lot of consolidation sideways in that range. Support level is going to stay put at $581, down to $540 for Meta. So a lot of consolidation sideways in that range. Resistance staying put at 603. Netflix also selling off here, coming back down after, again, seeing a lot of negative divergence, and support level is going to stay put roughly at $701 per share, down to as low as $661, and resistance staying put at $725 for Netflix. So support at $700, down to $661 for this company. Coming over to Google, and again, I will be doing a more separate, more dedicated analysis on Google here, but 166 is where we are, so a lot of consolidation sideways. Resistance back up to 176. That's going to be a potential target for Google, and support level inside this green rectangle sitting roughly at 152, down to as low as 147 for Google as well. Coming over to Microsoft, and Microsoft here also pushing higher. However, sellers stepping in to bring us back lower, and resistance is going to be at 432, a very, very strong area of demand and support in the low 400s for Microsoft. And finally, we come over to Enphase. Enphase is starting to look very attractive here at this area of support and this area of demand here, considering how oversold this stock is now with the RSI and the MACD. And it's also coming down to a very, very incredible area of demand at the moment, with the resistance staying put at 124, 125 for Enphase. And finally, we come over to Costco. And Costco on the day, a lot of consolidation sideways. Support level is going to stay put at 872. Resistance back up to $919 for Costco. So a lot of consolidation in that range for this company. And like I said, support at 872, resistance 919. So hope you all enjoy this video and a complete update on the markets. Let me know your thoughts down in the comment section below. As always, make sure that you drop a like and subscribe to the channel. Again, if you want to get access to all the updates, all the trade alerts, MoneyVest website access, all the members only videos, links going to be down below. We'd love to have you on board. There is a 16% annual discount that's available for the holiday season that's just getting started in Q4. So links going to be down below. Happy investing. I'll see you all in the next video.